Hey everyone, welcome back to the channel. It's January 2026. The crypto market is sitting on a powder keg that's about to ignite into one of the most explosive bull runs we've ever seen. Today we're diving deep into the single biggest reason why Bitcoin and the entire altcoin market are primed for massive gains this year. Even though the chart still looks shaky and scary right now, the answer lies in one of the greatest macro investors alive, Billionaire Stanley Druckenmiller. He's been bullish on Bitcoin since 2020, and he dropped a timeless piece of wisdom years ago that perfectly explains exactly what's holding back the next leg up. Spoiler, it's not the fundamentals. The fundamentals have never been stronger. It's the technicals, and that disconnect is creating the opportunity of a lifetime. Let's break this down step by step, because the setup in front of us is truly historic. First, let's remind ourselves how ridiculously bullish the fundamentals are for crypto heading into 2026. The Federal Reserve has quietly restarted QE. They're trying to rebrand it as reserve management purchases. But make no mistake, this is money printing. After years of balance sheet runoff, they're now expanding again, with $40 to $80 billion a month expected to flood the system. Liquidity is coming back in waves, and that's rocket fuel for risk assets like Bitcoin. Legislation is finally turning pro-crypto. We've got clarity, regulatory green lights, and a much friendlier environment than we've seen in years. Wall Street is all in. Major banks are filing for spot Bitcoin and even Solana ETFs. BlackRock, Fidelity, and now others are seeing record inflows. The SEC is actively pushing tokenization of traditional finance, bringing stocks, bonds, real estate, and more on-chain. The bridge between TradFi and crypto is being built at lightning speed. Fundamentally, crypto has never had a stronger tailwind. Institutional adoption is accelerating. Macro liquidity is turning positive. Tokenization is unlocking trillions in real-world assets. The long-term thesis is rock-solid. Yet, the charts are still flashing caution. Bitcoin recently broke and confirmed below the 50-week moving average. For the past 15 years, whenever BTC has broken and held below the 50-week MA, it has almost always signaled the start of a new bear market. Historically, real bottoms don't form until we touch or reclaim the 200-week moving average. Right now, sitting around $57-58K. So here's the massive disconnect that Druckenmiller's wisdom perfectly explains. Big institutional money was ready to pour in. They saw the regulatory clarity, the ETF approvals, the macro tailwinds, the Wall Street endorsements. They were about to pull the trigger. But then they looked at the chart and thought, whoa, what happened here? The market knows something I don't. And they paused, they hesitated, they went looking for the 20 or 30 other great fundamental stories where the chart still looks clean and bullish, because that's exactly what disciplined billion-dollar capital does. Stanley Druckenmiller said it best years ago. When I make an investment decision, sometimes the idea comes from the charts, but I will never invest just on a chart. But if I really like a fundamental thesis and the chart stinks, I won't do it. My old boss used to say, there are 6,000 girls out there. If 20 or 30 look great, I don't need to bother with the rest. You can always find 20 or 30 great fundamental stories where the chart looks good too. That's the key insight nobody else in traditional finance or even in crypto is fully appreciating right now. The market is smarter than any one of us. The chart is the final filter. If the technicals are ugly, even the most compelling fundamental story gets put on hold, at least for a while, right now. Crypto is living this exact reality, but here's where it gets exciting, because we know exactly what caused the technical damage. It wasn't a sudden collapse in fundamentals. It wasn't a change in the thesis. It was a violent, unexpected, cascading liquidation event on October 10th, mini black swan that nobody saw coming. What happened? Cascading liquidations across cross-collateral positions. Market makers pulled liquidity in panic. API issues froze traders from managing positions. Over-leveraged DeFi looping strategies imploded simultaneously. Forced selling hit all at once, creating a perfect storm of leverage flush. It wasn't a new bear market. It was a technical capitulation, a brutal, shakeout of weak hands and over-leveraged positions. The big money looks at the broken chart and sees risk. They see uncertainty. They see, maybe the market knows something we don't, so they wait. But we see the truth. We know it was a liquidity event, not a fundamental collapse. We know the thesis is stronger than ever. We know the macro print is coming. We know institutions are circling. That means the current pause is temporary. That means this dip is a gift. This is classic blood in the streets territory at the moment when doubt is high. Confidence is shaken and the herd hesitates. The smart money quietly accumulates when liquidity ramps up, and it will. When the 50-week gets reclaimed, when we hold or bounce hard off the 200-week, the confidence returns fast. Institutions will flood back in, and the move higher will be violent, swift, and massive. This is the window. The market is giving us time. Doubt plus time equals opportunity. So ask yourself the real question. Do you trust the long-term thesis? Do you believe in the macro liquidity wave that's building? Do you believe in the ETF explosion, the tokenization boom, the institutional adoption that's already underway? Do you believe Bitcoin is digital gold in a world of fiat debasement? If your answer is yes, then this technical dip is your moment to position. The only variable left is time, and time is on our side. History shows us over and over. Markets climb walls of worry. They reward patience. They punish FOMO late in the cycle. We're still early in 2026. The fundamentals are screaming bullish. The technicals are the only thing holding back the flood of capital, but technicals don't last forever. When they flip, the move will be fast. When the 50-week is reclaimed, when the 200-week holds, when the chart turns green again, the institutions won't hesitate anymore. They'll pile in. And when they do, Bitcoin and quality altcoins are going to run like never before. So what do you think? Are we heading for a deeper correction first? Maybe a final flush down to the 200-week? Or has the bottom already been put in, and we're just waiting for the technical confirmation? Drop your honest take in the comments below. I read every single one and love hearing your analysis. If you're stacking during this fear, smash that like button right now. Subscribe and hit the bell so you never miss a daily update where tracking every twist in this wild market. The bull run of 2026 is loading. Don't sleep on it. The window is open, but it won't stay open forever. See you tomorrow. Let's keep building this together.